Hey there, it's Ryan from Precision Trading Labs, and I'm making a venture guess here. Have you been watching a ton of trading content on YouTube to deal with the most recent volatility? You got 15 strategies floating around in your head, 6 indicators on your chart, and somehow you're still not sure where to pull the trigger. I get it. Trading can feel like you're constantly one YouTube video away from finally understanding what's going on. But here's the truth. Professional traders don't trade with more noise, they trade with more clarity. Okay, so in this video, I'm going to hand things over to Mitch Firestone. He's my business partner and friend for years now, and he's going to break down exactly how we keep things simple, repeatable, and good for a funded account. Okay, these are real setups, real thought process, zero fluff. And if you're tired of feeling overwhelmed and want to see what real clarity looks like in the market, this is your moment. So what I'm going to do is I'm going to turn things over to Mitch. He's going to share his screen. He's going to go through before.
There, folks. This is Mitch Firestone with Precision Trading Labs in New York City. I'm going to show you some recent futures trades that occurred with our members from last week. One of the programs that we offer our members here is the ability to earn a funded futures trading account. For those of you who aren't familiar with this, there are a number of companies out there that offer programs to qualify for an account. Where in fact you do not actually have to put up your own trading capital. These are referred to as sponsoring companies. And so the way they work is they put you through an evaluation process. Some of them call it a combine. And what they do is essentially they hand you a simulated account. And what you have to do is then trade futures through whatever methodology you want to do it. And what you need to do is you need to meet qualifications for earning money, profitability, as well as managing risk. And if you come out on the other side meeting their qualifications, you're given real capital to trade. And again, you're not putting up your own money. And of course, they're not doing it out of the goodness of their hearts. In return, the sponsoring company takes a small percentage of your profits, and it's typically around 10%. But it's actually a real nice deal because you're not putting up your own trading capital. And so I'm going to show you some trades that we shared with our members last week. And so these were used by both people that are in these programs in order to qualify, as well as some of our members who have actually earned these funded accounts. Not to mention me, I did it in my own personal trading, of course. Also, the way these programs work with these sponsoring companies, these are all intraday trades. And of course, because of the fact that they want to make sure that the risk is managed very well, and obviously, overnight and swing trading with futures can lead to big losses if it's not done right. So consequently, they don't permit it. So these are all intraday trades, and you'll see that generally the time frames that are used are intraday time frames. So anyway, that's what I'm about to show you here. Before I get going here, the usual disclaimer: everything I'm about to show you here is for informational and educational purposes only. Precision Trading Labs, we are neither money managers nor financial advisors. So anyway, let's take a look at some of the trades that we put up here last week. So this was a chart of the S&P. There's obviously been a lot of market volatility lately, and of course all the swings associated with tariffs, all that kind of stuff. So at any rate, this is what we were looking at last Thursday. You can see the timestamp there. That was April 10th. So this is a 3-minute chart of the S&P, and so this is what I was looking at. Approximately 1:50 in the afternoon. I'm in New York City here, so this is 1:50 p.m. Eastern time. And so at any rate, this was an area where I had set up a short trade here. This is again a 3-minute chart here, and if you notice right here, price came up, rolled over here, and then notice that steady march down here, and then right there was a clear turn in price after that brief consolidation here. This essentially represents an exhaustion of buyers here, where price came in, consolidated, and then dropped suddenly out of there. Nobody was willing to buy here anymore, and so this exhaustion of buyers here, if we think of the the trading that went on in this little region here. If we think of the shares that are offered by sellers, we can think of that as the supply of shares, or in this case, contracts that are in here. That's the supply of contracts. And if we think of the shares that are acquired by buyers in this region, we can think of that as the demand for shares in this region, okay? And so right in here, supply and demand are in balance, okay? But right here, supply and demand go out of balance, because at this point then, we only have um, there is only supply left. There is no longer any demand. Hence, we refer to this as a supply zone. Okay, and when price returns to a supply zone, a good percentage of the time, we will then see a repeat of this behavior, because essentially what we are seeing here is that this was an area of interest where sellers wanted to sell. It's just that there was only a limited opportunity to do this, because immediately there was an exhaustion of buyers here. And so when price returns to this region, there's the expectation that there's going to be another wave of selling. Okay, and so this is the trade that I actually had set up and presented to our members last week. Okay, so right here, this would be the entry point at 52.31.75. Okay, and of course, the way it works is that we have a zone here. We expect and hope that price will turn at some point, either within these two lines, within this within the boundaries of this zone. But if price doesn't turn here, well then in fact we're going to have a losing trade, and we have to accept that we're going to take a paper cut on this. And so essentially this is our entry, okay? And so what we do is we place our stop a bit above the back line of this zone, okay? And so at that point then our stop out point was going to be up here at 53.46, okay? So that was where that's where our stop out point was going to be, okay? And then right down here, this is where we would be looking to potentially take profit, okay? And so right here, we can see that there was approximately 25 S&P points here, which of course would represent pretty much 100 ticks. Using the micro contracts, each tick is a buck and a quarter, or each point is $5. Obviously, using the full contract is $50 a point and $12.50 a tick. But using the micros, of course, everything is 1/10 the size. Okay, so this was our setup here. Okay, and so what I did was at the time set it up where we're basically trading 3 micro contracts. And so in terms of the risk profile on this, there was $130 of risk per contract. And since I was going to put on 3 contracts, that was $390 of risk. And then hopefully if we actually got down to here, well, then we would make approximately $1,100 if we made it all the way down there. Okay, that represents a 3-to-1 reward to risk here, and you can see that using TradingView here, they have that nice feature that they actually show you your reward to risk proposition there. So 24.5 points of 24.5 points of risk, approximately 74 points of profit if it all goes exactly the way we'd like to see it go. And so that was the foundation of this trade. So we're waiting at that point. We're waiting for the trade to come to us here. So that was the setup there. Okay. So if we now start to kind of flash through this sequence here. Price then started to head up here. I had also mapped out a couple of demand zones down here. It's the same exact narrative, just turned on its head. This represents an exhaustion of sellers here. Here we had an exhaustion of buyers. Right down here, we had an exhaustion of sellers. Okay, so but at this point, we can see price was heading up here. So we're waiting for price to come up here and then turn and then head back down. And again, if it didn't work, then we would get stopped out up here. Okay, so that's the setup there. So if we now go forward here, we can see price came up here, hit the front line, drove into it a bit, but then eventually turned and started to head out of that. Okay, and so now price was now heading in the direction that we were looking for this to happen. And I took a couple of additional screenshots here. and you can see right there we got down to about here. And then actually I started to look at this chart a little further, and I realized right in here this was a clear area of consolidation here, and price had actually popped from here, and I realized, you know what, we might not just get down to this, and I actually had a presentation to do, and so I think actually at this point I think I killed the trade just around here. So we basically got out with about $900 of profit there. Okay, and so that was about a little less than 3 to 1, but that was the in fact, that's where I actually got at 873. Okay. In fact, that actually it actually started to do exactly what I thought it was going to do. It kind of stopped at that point. And if I didn't have another presentation to do, I would have maybe left it on a little longer. But I just decided to kill the trade right there. So that was that S&P trade. So that actually went very well. A number of our members actually took that trade as well. So that was that trade. Here's another trade that we put up in this is that same day again, April 10th. And this was actually later in the afternoon. This was about 2:30 p.m. So in terms of the regular stock, regular NYSE session, we've got about an hour and a half to go. And of course, with the futures, the futures actually trade till about 5 o'clock. More often than not, I'm actually looking to get out kind of at the end of the regular session. A lot of times some wacky things happen in that extra hour. I'll certainly leave trades on, but I'm a little more cautious in that. So, but there was certainly about 90 minutes to go here. So right here, I had left this on here. Frankly, I wasn't necessarily expecting this setup to fill. But I had it up here figuring, well, I'll leave it up here, and if it doesn't fill today, well, then maybe I would then put it on overnight and see what happens. So at any rate, that was the setup for that. And if we now go forward here, we can see price actually pulled back here, and it actually pulled back here around 350. And so I decided to let it trigger here. But again, I was going to be cautious about this because I'm a little wary of that last hour. But again, it did come down here, and so we got in here at 0.5736, and this is incidentally, so this is the New Zealand dollar. Okay, so that's what we're trading here. Okay, and we were actually trading that on a 5-minute chart here. So this represented a 5-minute demand zone. Okay, and one of the things I did like about this setup, it got created during the normal currency trading hours. That's 1 p.m. The settlement price on on currencies, I believe it's at 3 p.m. Eastern time. So this is all trading within the norm within the session where there's major institutional volume here. So at any rate, we're pulling back to here. Again, I did this with 3 contracts. You can see right there was $360 worth of risk. So this thing had kissed off the front level, and you can see this thing had just started to bounce here, or at least hopefully bounce at the time. So we can see right there that there's the next slide there. We'd actually started to bounce there, so we were up to about $200, and then it kind of burst through there, and so and in fact that was where it went basically right to that area of supply up here. Okay, and oftentimes that's the way price will move. Not always, of course, but a fair amount of time, price will in fact bounce between supply and demand. Quite often that holds better when you're dealing with higher time frames. But in this particular case, it went right to the opposing supply zone on the dollar, and I believe you can actually see it came up and then it actually sort of at least paused there. And I think that was actually the last, that was actually the last shot there. So in fact, let me just go back to this for a second here. So right up there, that was the end of the trade there. Okay, and so if we go back to where it was, this actually turned out to be a nice profitable trade there as well, and I think we picked up about $800 on that. All right, so that was that. And then the last trade was the Aussie dollar. Okay, so again, that was off of a 5-minute chart. Hope you recognize at this point, that's a supply zone there. Okay, price came up, consolidated, dropped suddenly there. We had an exhaustion of buyers here. If we went back in time, also one of the things that we do is we obviously have to qualify these levels in terms of their structure as well as what happened previously at this level. And so in qualifying it, I figured this was actually a good level here. What I did though is I waited for price to actually drill into this zone a bit, and then I actually ended up taking the trade in here, and that kind of actually improved the reward to risk proposition on it. And the reason I did that is price actually, if you notice, price had wicked in here and immediately dropped out of here. And so since I was a little late to the party, I decided, you know what, let me wait for this thing to actually drill a little bit into the zone there, and then I'll kind of reduce my risk proposition there. So that's where I ended up taking the trade right there. Okay, and so we can see right there, again, there was about $360 worth of risk. And then you can see actually when price drilled in here, you can see it actually started to go against me a bit. I think that's like 2.5 ticks there, so not a big deal there. Each tick on the Aussie dollar is $10, so that's 2.5 ticks. And again, I happen to use 3 contracts there, and there's that same roughly $360 or risk or so. And so that's where price started to turn there. And so if we can now flash forward here, we can see then price came in. Okay, it actually then continued to then continued back here. It actually went a little beyond that zone there. And so not quite a near-death experience, but it did actually get up there where I think this trade was down about $270 or something when that wick actually went through. If you notice, the wick went through the back line, but we obviously give it a little extra wiggle room here, a little room for the trade to breathe. So that's why we managed to stay alive on this one. But then eventually it came in, and about 20 minutes later or so, then it actually started to head down. And if we now continue and follow that down, so you can see right there, at that point we were up about $540, and I believe that's kind of where we got out right there. I believe at around 585. Oh, actually, I'm sorry. This actually continued down a bit further there. So I think that's where we got at around about 705 there. Okay, so at any rate, those are the 3 trades. And one more thing before I go here. So here is a setup that I was actually looking at and I've posted this, of course, for our members. But here is a setup for oil. So this is the West Texas crude. This is your standard oil as opposed to the Brent contract. So this is oil, and so we're using the micro contracts on these. So in the case of the micro, each penny of movement on the oil is worth $1, as opposed to $10 if you were using the full contract. And so right here, you notice that I have both a supply zone here, where there's an exhaustion of buyers that occurred, a demand zone right here where an exhaustion of sellers occurred. And so right here, I've actually got 2 trades set up, one above current price, one below. It looks like price might be starting to head up, so maybe it's a little more likely that the supply zone short trade will trigger, but it could just as easily roll over perhaps, and we end up with a long trade down here. But again, here's the setup here. So right here, our entry would be here at 61.74, and our stop out would be at 62.05. So we've got right here 31 cents of risk, which of course translates to $31 per contract. So with the micros. So if it happens, let's say your permitted risk profile, and let's just say we're using that 350 number that I showed you in those prior trades, well then that would allow you to trade 12 micro contracts. Or of course you could trade one full contract and then trade 2 or 3 micros on top of it. So, but that's what the risk profile would be up here. And of course, the reason for that is if you're looking for, let's say, $350 worth of risk or so, if you take 31 cents and you multiply that by 11, well, let's say multiply it by 12, and that would come out to about 363 or thereabouts. Okay, so that's your profile on the short trade. Down here on the long trade, we would have what is that, 40 cents of risk here between 60 and a quarter entry and 59.85 stop at. So that would allow you to trade. That would allow you to trade precisely nine micros. If, let's say, you were looking for, let's say, 360 dollars of risk per trade, that would be your position sizing there. Okay. So at any rate, that's that setup there. So again, there's your short setup and there's your long setup, and we'll see what happens. So at any rate, that's what I got. Thank you for your attention and your privilege of your time. This is Mitch Firestone with Precision Trading Labs, and I'll see you next time. Take care. Bye-bye.
All right, how good was that? Big thanks to Mitch here for walking you through those setups. It's one thing to hear people talk about trading; it's another to see it done with that level of precision and calmness. So here's the deal, guys. If that clicked for you, and if there's something in your gut is going, wait a minute, this is actually how I want to trade, then now is the time to take the next step. This is what we do every week with our members live on Zoom, in our live chat room, one-on-one. We simplify the process, eliminate the noise, and help you become a confident, consistent trader without staring at screens all day or second-guessing every decision. So if you're serious about this and you really want to see if our process is a fit for you, click the link in the description. Book a call with me. There's no hard pitch, just a real conversation to see where you're at, where you're stuck, and if we can help you, shortcut the learning curve. If we're a fit, we'll show you how you can plug into this. If not, you'll still walk away with clarity on what you should do next, okay? Either way, this could be a great turning point for you. So go ahead, hit that booking link in the description or just below this video here. Grab a time on my calendar. We'll have a conversation, and I will talk to you soon. Take care.